Welcome, folks. Chris Versace here, portfolio manager of the Street Pro portfolio, and this is the Stocks and Markets podcast. I think you'll agree that name is, well, let's just call it pretty self-explanatory. Now, we and the rest of Wall Street, we're all back from the Labor Day holiday. As you think about it, some folks, they're concerned about the market's valuation following, a string of record days for the S&P 500 in August. Others, they're questioning EPS growth prospects for the second half of the year and into 2026. But others, they're looking to position themselves as we get ready for the October, November, December year-end push for the markets and head into 2026. All good questions, and in some cases, good concerns. In fact, I wrote all about those in the August monthly roundup for the Pro portfolio. If you haven't, I'd suggest you might want to read it maybe once, maybe even twice. But to help us think more about these questions and concerns here on the podcast, as well as touch on some of his transformative themes, please welcome Ed McGuire, Senior Director of Research at Freedom Capital Markets. Ed, how are we doing today?
Always good, Chris. It's great to be on, and thanks for having us.
Happy to have you. You are from the same firm, from a good friend of ours, Mr. Jay Woods, and we love Jay. Jay's always informative, insightful, always gives us something to think about with a little wink and a laugh along the way. And I'm sure you're going to do the same. But before we get started, Ed, you kind of tipped something to me when we were talking before we started recording, that you, much like myself, you've got a steeped history, right? Following stocks, looking at the market, and just give us a thumbnail sketch, if you can, as to, where you made your bones, how you got started, touching on your experience in software along the way.
Sure. I started in research actually at CIBC Oppenheimer, covering enterprise software in right about the time that software as a service began to emerge. And I was at Merrill Lynch for almost 9 years. Spent a little time in investment banking, but I covered IT security and infrastructure applications. Business analytics was an early focus in the early part of the 2000s, and then I spent 7 years at CLSA, where I covered all software, but did a lot of work on thematic topics, because one of the kind of the more interesting aspects of technology is that you have innovators that are constantly pushing the envelope, looking for the next the next application or business that can really reach or touch a billion users. And that gave me a taste for a lot of long-term thinking. I had spent a little bit of time at a Japanese bank prior to joining Freedom, but we're here building up a brand new research team in the U.S. And Freedom is actually a publicly traded firm. Ticker is FRHC. Most of the business is outside of the U.S. currently, but currently has 10,000 employees. And research is very important for us, because our mission is really about highlighting, how do we connect ideas with investors. And technology, has always really been kind of close to my heart, because you find some of the most innovative and forward-thinking entrepreneurs and business people and inventors. You are allowed to try almost anything and fail, which is really one of the beautiful aspects of the culture that we have, the culture of innovation in the United States, with our venture capital ecosystem and engineers and entrepreneurs who are willing to fail, but willing to pivot, and often willing to just fall on their face and get up and reinvent themselves many times. And that's what makes the sector so interesting, but it also powers almost every other industry that we touch on a daily basis.
All good points, Ed, but I have to say you had me at thematic. As folks know, I'm really big on thematic investing and identifying multi-year structural changes and isolating the companies that are poised to benefit, while, as I like to say, sidestepping those that are either getting left behind or they're hitting pronounced, structural headwinds. So, but I want to talk a little more about, thematics shortly. I really kind of want to jump into some of those issues that I mentioned at the top. We're just back from the Labor Day weekend. The S&P 500 is hit multiple record highs. What are you thinking about in terms of the market as we get ready for the year end push? Are you concerned more about valuation, earnings growth? What are you thinking?
Sure. I mean, we've had a year of an enormous amount of uncertainties. I think the underlying U.S. economy seems strong, but there are signs of weakening on the edges around employment. You have a bubble around AI. I don't think I'm exaggerating to say that there's some rather
You're gonna go with that dirty word, huh?
frothy. Well, maybe we call it a bit frothy
Okay.
valuations. So there are concerns that some of the we've got concentration in the S&P in technology. You have these Mag 7 names that have been driving so many of the stock gains in the broad market. But underneath the surface, I think what you see is there are so many of these long term trends that are playing out that are really transformative. In particular, adoption of AI in really characteristic ways that will help redefine business process. You've got an enormous of investment uh, trend right now with capital investment, building out data centers and infrastructure. In a way, it's somewhat reminiscent of the build out of the telecom infrastructure back in
Mhm.
the late 90s. I think investors should be cautious of being kind of overly optimistic about adoption. But I think if you're pointed to the appropriate North Star and you focus on themes and then apply stock selection for the best companies and best management teams, that's a good way to both ride the waves to the upside and weather any stormy weather.
Well, I appreciate you validating what I do, Ed, and to be fair, we've never spoken before. So the fact that you're kind of coming on and saying that is I appreciate your perspective on that, and it's very reinforcing for the work that we do at the Pro Portfolio. But let's talk a little bit about this AI. You are correct that the S&P 500 is kind of clustered around the top 7, 8 names. Of course, most of them are kind of the Mag 7, but yet I think when we kind of look at where we are in, let's say, AI adoption in the enterprise or with the consumer, we're still, to put, in the old baseball analogy that everybody on Wall Street seems to love. I think we're like in the second, maybe third inning. We're not anywhere close to the halfway point, I don't think.
No, I would agree, and I think it's really easy to look at certain industries that have been that have been very visibly digitalized. For instance, like e-commerce. I mean the percentage of retail activity that went through e-commerce, I believe, went from around 2% in the beginning of the century, around 2002, to almost 20%, if not more than that, just over the last couple of quarters. So, we've really seen an enormous transformation there. But under the hood, when you look at businesses across healthcare, energy, infrastructure, resources, manufacturing, some of the what you consider more legacy industries are
Mhm.
slowly adopting technologies to help optimize their processes. And what's transformative about this is it's not just about efficiencies or eliminating human employees. A lot of it is about driving top line growth,
Right.
optimizing operations and managing risk. So the ability to instrument and draw data from physical processes and then be able to analyze that data. I mean, I think people have been working with data warehousing technologies going back, into the 1980s. So many of the principles for data analytics and the application of analytics to management processes has been around for decades. But now what we've had breakthroughs in machine learning and what people call AI. So there's a lot more of an ability to to apply advanced analytics and even predictive or anticipatory analysis to business processes. But I was a huge proponent of growth in what people used to call the Internet of Things. I think we still call it the Internet of Things. But if you think about the billions of sensors that can be deployed into the physical world that will generate data that can be analyzed, that is unprecedented, and we've got a long way to go. There are a lot of physical issues that we need to, or physical constraints that have to be dealt with. Battery life, the challenges of connectivity and communications. Certainly, having enough power to ensure that all of those servers and data centers are running. And then, of course, there's always the human element, like how humans add value to any process. I mean, I think with even though there are a lot of many meaningful concerns about how AI it may be eating into certain types of employment, and I wouldn't say I come out either on a highly dystopian or techno optimist side. I would say I'm kind of in the middle. There is churn and there's disruption, but all business effectively benefits from human judgment, human relationships, and you have to look at those aspects of an organization or an entrepreneur or even an industry where that human element cannot be it can't be obviated by a
Mhm.
machine. It actually can be extended.
So, as we think about this being in the early innings, and obviously there is some industries and sectors, let's call it, that'll be further ahead in their adoption. Some that are still in their infancy. So somewhere in that crawl to run perspective, Ed, are there areas that you think are ripe for AI adoption that folks aren't really paying attention to? And I ask that because, in the pro portfolio, we have Axon Enterprises. And Axon, most folks think of tasers, body cameras, but they don't necessarily clue into Axon's, software services business, the cloud that they have, and how they can drive productivity inside public safety by bringing AI to market. So, yeah, that's one example. But are there any that you think folks are not, capitalizing on or not paying attention to?
Well, I think the entire manufacturing sector where you have, I mean, certainly aerospace and defense is an area where you have a lot of heavy machinery, heavy discrete machinery. There are I think a lot of these industries are not necessarily, they talk about industrial technology, but um, I would say that one interesting area is smart cities or smart spaces. The real estate industry is an area or it's a sector where you have a lot of subsectors, things like multifamily, industrial,
Mhm, mhm.
office space, but public spaces. But the ability to apply technology, for instance, to not just improve public safety, which is what people associate with cameras, but also, for instance, to be able to enhance a customer experience, helping to, for instance, reduce lines or queues if it, at large public venues. The ability to have more anticipatory services that the businesses can provide, for instance, for tenants, for commercial tenants, or people living in their homes. I think that's a lot of these advances proceed very steadily, but you don't really notice it because it's I guess it's a bit of a slow boil.
Interesting, interesting. Are there any particular companies you think that are best positioned? I know a lot of folks talk about NVIDIA, obviously, and to be clear, we own NVIDIA in the portfolio. But are there other software companies or even other chip companies? For example, you mentioned IoT. I'm sure
Mhm.
folks will be thinking of like maybe a Qualcomm or a Skyworks or something like that. Their roles in the IoT market. Are there any less obvious names that you think folks should be thinking about?
Sure. Well, I'd say that For instance, in semiconductors, I mean, you obviously have the big names like Nvidia and Taiwan Semiconductor, but even some of the smaller the companies that are enabling the design of systems like Cadence Design Systems or Synopsys are really interesting. They play an incredibly critical role. Um, when you look at industrial machinery, I think there's some very interesting names in that, like Johnson Controls or Rockwell Automation or Xylem, where you're dealing with physical infrastructure, and these companies have been thinking a lot about how to apply intelligence to the data that they collect to manage their physical systems.
Interesting. Interesting. So Rockwell Automation is one that we've kind of looked at in the past, and I think from a portfolio perspective, we'll be looking at it again. So that's actually kind of an interesting one for me. But above and beyond AI, because I think a lot of folks are kind of keyed into that. Ed, what are some of the other strategies that you've identified in your 10 transformative themes?
Sure. Well, one of the biggies is we call it smart health. So this application of technology to sequencing is incredibly powerful. I mean, right now, I think the latest estimate is there are about 1,200 publicly traded biotech companies, and maybe another 1,200 that are private that are worth looking at. But the cost of innovation and the pace of innovation is so deeply impacted by this broad the theme of cheap genomic sequencing. One thing actually I'd like to highlight that was really influential along the way has been the appreciation of exponential change, and also and the flip side is the cost curves that a company advances in, not just technology. So I think Moore's law is pretty well understood,
Hmm.
but there's Kumi's law. There are similar phenomenon that a company, storage, communi- communications and bandwidth, but also the cost of sequencing the human genome has dropped by like 99% in since Craig Venter first sequenced his own genome. And when you get those the decline in costs, I mean it's really driving some unbelievable breakthroughs, particularly in oncology. And I wouldn't say that there are any specific names, because I think you got to be pretty well versed in the science to
Hmm.
invest effectively. But I think the impact on potentially lifespan, even in our lives, is really revelatory and transformative.
So maybe, and I'm not saying that there is an ETF for this, but maybe given your comment, maybe an ETF is a safer way to kind of play it for folks that are kind of interested in dipping their toes in the water,
Hmm.
but don't have the resources, so to speak, or the time to really investigate. I think you said 1,200 companies.
Yeah, yeah, I think there's a similar argument that can be made really across the what we'll largely call healthcare life sciences.
Hmm.
Advances in diagnostics or robotic surgery, for instance, is pretty well known. I think many people are aware of what
Hmm.
Da Vinci Surgical is able to do. But you also have even just the ability to automate a lot of the processes in our the tangled hairball that makes up the U.S. healthcare system, applying AI to payments and approvals and processes. Of the administrative aspect of the healthcare uh, industry it offers an enormous amount of potential for value creation.
I agree. And when you think of the size of the healthcare market, you think of the demographic tailwind with the aging population. There's so many facets, I think, to the healthcare market that there's a way, whether it's to squeeze cost out, deliver a better experience, what have you. I would not be surprised if I wouldn't say robots or robotics, but let's call it AI and some other type of automation really transforms that business.
Yeah, it's one of the big impacts of the well that we have a couple things happening in demographics, right? You've got
Mm-hmm.
lifespans are increasing in the developed world for the most part, and then fertility rates are dropping. So there are a lot fewer younger people, a lot more older people, and in countries like Japan, you're seeing a lot of innovation around these, personal robotics, and I don't know that humanoid robots, necessarily become a thing. We have to um, we have to look at what function that a robot can bring to bear. But we certainly saw during the pandemic, even just service delivery robots, for instance,
Mm-hmm.
in
Mm-hmm.
hospitals or in hospitality, the ability to just automate a lot of these rote tasks that humans need to do. They're not going to replace the sympathetic voice of a nurse or a doctor. They may not.
Hold that thought. There are companies using AI to make phone calls to assisted living facilities where people have little to no family visitors so that they can kind of talk with them, see how they're doing, this sort of thing. So I think there's a lot more going on here, Ed.
Mm. Well, I recall a few years back, I was at one of the Singularity University conferences called Exponential Finance, and Bob Pisani actually had me on a panel, and
Mhm.
one of the comments that he made was he felt that the movie Her, which was about the guy falling in love with the AI voice, was going to be in many respects the most important sci-fi movie of the decade, if not the century. And I don't think he was really exaggerating.
We don't need to go down the path of folks getting relationship advice from Chat GPT, do we?
Yeah, probably better to avoid it. Although they might end up being a little bit better than that friend who's a little bit off kilter.
I don't know who you're hanging out with, Ed, but maybe we'll figure it out one day. Anyway, back on topic. We were talking about healthcare and how it's kind of ripe for disruption. You were talking about genomics. I tossed in AI. Um, I let me step back a little bit. So you kind of talked about using thematics and a multi-year outlook, and I kind of talked about how I think about thematics. And I apologize because I didn't ask you, right? How do you kind of identify and structure some of the themes that you see? Because candidly, it's a question I get all the time, which is, oh, how do you come up with a new theme? And it's not that simple. And I say that because I think it's a simple mistake to be like, and I'll use one notable example, 5G. And I was like, no, 5G is a technology. It's not that's not the theme. The theme is more, call it the connected consumer, digital infrastructure, something along those lines. 5G, 6G, 4G, 3G, 2, they're all aspects of that connectivity. So, kind of with that, how do you think about thematics and how do you craft a theme or know when you have a theme, not some kind of trend?
No, it's a great question. I would say what I like to do is I like to start from first principles, which is to identify a long term secular trend. So
Mm-hmm.
this if you're a trader, you're going to be a lot more focused on, for instance, short term earnings or Fed announcements or near term catalysts. But when you think about how Moore's law represents this doubling of the amount of compute that can fit in a on a meat on a chip. I mean, that has proceeded pretty much uninterrupted through wars, recessions, boom. I mean, it really has, that's a long term theme, and there are a number of those. So thinking about, okay, declining costs of information technology, what that does is that lowers barriers to innovation. You have these the accelerating power of AI and machine learning, where we have these breakthroughs where they certain functions can be done by machines better than humans can. You've got this global connectivity phenomenon where you have now I think it's we've gone from maybe 15% of the earth was connected to the internet 20 years ago to now we're coming close to about 80% of all humans are connected. We talked about demographic changes, and again, not just the aging of workforce, but also this new generation, Gen Z, brings a whole different. They have sensibilities, and they'll be responsible for trillions of spending power, and then.
Ed, let me just cut you off because did you see there was a PwC study out this week
I
about
haven't seen it yet.
so it's about the holiday shopping season, and this is fascinating. Overall, expectations are that holiday shopping spending per person is going to fall about a little over 5%. But when you kind of dig into it, right, the boomers are going to continue to spend. Some would argue because they have the money. Gen Z, on the other hand, which drove the outsized spending last year, they're going to cut their spending by 23% in 2025 compared to 2024. And you mentioned Gen Z is kind of like like a lightning rod of sorts. And that just kind of jumped out at me when I read that, because that's a massive amount of spending not only being cut, but it's such a 180 compared to last year when they drove the upside.
It's well, certainly it's a reflection of I think some challenges that, for instance, that
Mm-hmm.
recent grads are facing in the job markets. I also think there is a there is a longer term trend at work. I mean, when you look at people becoming digital nomads and this whole if you think about turning something into a service, where you turn software into a service, um, this idea of being able to virtualize almost anything and
Mm-hmm.
buy whatever you need, work on demand, and do whatever you need on or get whatever you need on demand, actually results in more of an asset light life. If you think about
Right.
consumerism is about acquiring a bunch of stuff, and of course, if you have a big house in the suburbs with a big garage, that's where you end up storing your stuff. But if you're young, if you're are living in a city, and actually urbanization is one of the big trends too. We've got um, over 50% of the world's population is living in cities right now, and that's expected to be over 2/3 by 2050. So you look at this broader trend of virtualizing what you need. We had obviously short-term rentals through Airbnb, what people used to call the sharing economy. Yeah, some of those ideas will work, some of them won't. But there are a lot of a lot of Gen Z are actually happy to work online. They have the virtual workplace. They can live in a cheap location, and a lot of them are really more interested in experiences than things. This is actually one of the other themes that we were exploring, was the kind of the rise of wellness. We call it better living, but
Mm-hmm.
I got to give a
Mm-hmm.
lot of credit to the millennials. Of course, have raised the game on uh, having smart foods, and being very cognizant of sourcing, where the food and drink comes from. But they also, people like experiences. They like to go to wellness centers. I mean, walk down any street in an affluent big city, and you'll see all manner of spas and services for people. Everything from Botox and tanning salons to vitamin IV drips, which have been
Our
a big
our
thing.
I'll share this, Ed. I did try to book a massage recently, couldn't do it. They're way booked out, so that's kind of a positive data point. But I sorry, Ed. I was going to
You
say
didn't
what
have an
kind of real.
automated. There's not a robotic massage.
I
I think
didn't
that might be
inquire.
coming next.
I didn't inquire for that. I was going to ask you, how do you do your due diligence on this stuff, Ed?
Well, remember Peter Lynch, of course, one of the all-time greats of investing, did a lot of his. He picked up a lot of his ideas by walking around. Now we don't have the
I
shopping malls that we used to have.
Right.
You gotta get out in the world and travel, and not just the big cities, but go into the more forgotten parts of the country, and see what people are doing and how they're living, and that can tell you a lot about what's happening, even more than trying to read it in the newspaper, because that's or online, as it were, right? Nobody reads newspapers anymore; those have all been digitalized.
Yeah, totally agree. In fact, on this bookshelf behind me is the Lynch book that you're casually referring to, One Up on Wall Street, which is a great read, probably one of the best books. And I think the story you're referring to is how he trailed his wife and her friends at the mall
Hmm?
and wound up asking her questions about, if I remember the story correctly, legs pantyhose and why they were such a big hit with women. And that he turned that into a sizable investment, from what I recall. So, no, I totally agree with you on that. Ed, any other themes that we should explore before we get out of here?
Well, I would say one of the big areas that I'm very focused on is trust and security. I think IT
Mhm.
security is going to continue to be a huge business that requires innovation. And when I was an analyst that used to cover security, I liked it because it wasn't a pure technology problem. It was an issue of human imagination, and there are a lot of deviant humans trying to do nasty things and steal money. And of course, cryptocurrencies have made it much easier for people to do things online. So security is a big focus. And I think the last area that I think is really fascinating is digital finance.
Hmm.
I wouldn't say I was early into crypto, but I became a convert to the principles around decentralization and decentralized finance back in 2017 and 18. I spent a lot of time in the sector, and I kind of feel like that crypto assets may or may not be something that investors want to explore beyond the Bitcoin or Ethereum too far. It's very risky. But the concepts of decentralization, blockchain, and certainly stable coins, this potential for having global frictionless payment systems, and being able to create value exchange networks among people without having a central uh, arbiter or authority is incredibly promising. And there were a lot of amazing ideas, I think, that surfaced in the one of the bubbles before the last couple of bubbles in crypto. But I see a lot of parallels with the internet in the 1990s, right? You remember people used to make fun of pets.com. It's like, oh gee, pet
Yes,
pet food over the internet. That's with the little sock puppet. I think that was
that's.
um,
I
it,
think isn't that called Chewies today?
yeah, it's doing about $2 billion a year, if I'm not mistaken. It's a big business, so you may only be a couple of decades ahead of things, and that's, of course, that's always the challenge, right? In investing, if you want to be early, but you don't want to be too early, because if
Right.
you're too early, you might be wrong. But try to anticipate what's coming over the horizon. I think the most interesting opportunities actually lie at the convergence of these big secular trends I was talking about.
As I say, Ed, if the only thing I like more than a one strong thematic is the intersection of multiple thematics, nothing better than multiple tailwinds blowing on a company's business. So I agree with you right there. Ed, before we get out of here, anything we didn't talk about that we should?
Well, I'd say we've covered a lot, but uh, I do think that we
Oh,
should be looking.
I got something for you, Ed. Two
Okay,
questions. Two questions. Here we go. Um, is the Fed going to deliver a rate cut in September? Yes or no?
I'll say yes.
Okay. Second, we have a bunch of tech company events coming up over the next couple of weeks. Apple with their event next week. Meta has Connect the week after. Google is going to be introducing some new devices, I think late September, early October. Which one do you think will be the most interesting?
Well, there's a lot of these are already priced in. I think what Google is doing, particularly around AI, is going to be particularly interesting. So I'm going to keep my eye on that.
All right, the Google event. All right, and I agree. I agree with you. I think early on this year, a lot of folks were kind of downplaying the potential for Google, seeing AI more as a threat to it and its key search business. But I pushed back and saying that the combination of search, YouTube, and all the other data that they collect, wow, think about that from an ability to train their models. Very different.
We really are going into a new generation of opportunity, and yeah, I think I come out on the maybe I shake out as an eternal optimist because I do see the bright sides, and I think even when you have market corrections or even worse, there that creates great opportunity, and there's nothing better than the collective and aggregate and individual imaginations of the incredible entrepreneurs that we have in this world, that we have in this country. And I think that's enough of an engine to continue to drive continued value gains, over the long term in our markets.
Excellent, excellent. Ed, for folks who want to, read more of your thoughts, kind of follow what you're saying, what's the best place for them to go?
Sure. Well, you can find me on LinkedIn under Ed McGuire, and at Freedom Capital Markets. We're publishing. I published a piece called Future Paths a month ago, and if you find me on LinkedIn or if you reach out to our team at Freedom Capital Markets here, we can make sure you have a copy.
Excellent, excellent. Ed McGuire, Freedom Capital Markets. Thank you so much for joining me. Ed, going to reserve the right to bring you back. I'm sure we'll have more themes to talk about in the future. And folks, thanks for tuning in to this episode of the Stocks and Markets podcast. We'll be back with a new one before you know it.